Is mortgage fraud on the rise? An article that I received just the other day seems to think so. Stay tuned and let's dive into this. Hey everybody, I'm Ryan Schramm, owner and broker of Ryan Schramm Real Estate, a boutique firm here in South Orange County. Mortgage fraud is a really big deal, and in case you didn't know, it was the major player for the Great Recession that took place in 2007. According to the CoreLogic Mortgage Fraud Report, mortgage fraud is rising in California and across the nation, so let's take a look at what they're seeing. Now, I just want to disclaim here, there are increases in fraud, but in no way, shape, or form is this anything like the Great Recession. So this isn't clickbait, but it is important to watch. So on this report, it was found that in Q2 of 2021, one mortgage application out of every 90 contained some sort of element of fraud. And then looking at refinances, one application in every 169th refi application had an indication of fraud. So pretty low numbers, but we need to look at, well, what did it used to be? So comparing to what it used to be, nationwide, mortgage applications with indicators of fraud was up 37%. And in California specifically, 39%. There's no denying that this was a very significant increase in mortgage fraud. But it is important to note that in Q2 of 2020, that year, as far as fraud indications are concerned, was an all-time low. If you take a look at the last 10 years, so 2021 to 2011, the increase of fraud that was experienced in 2021 Q2 was just a little bit more than the average. So that tells us that in 2020, Q2, which what was happening, pandemic, mortgage applications and the stringentness of how banks were looking at borrowers was extremely, extremely tight, which filtered out and bounced out a lot of mortgage application fraud. So that's why 2020 was such a significantly lower year. And now we're bouncing out of the pandemic into Q2 of 2021. And mortgage fraud on the applications is sort of rising again, which is more consistent with the 10-year average. I'm gonna simplify things a little bit here, and I'm gonna get into a little bit of what mortgage fraud entails, because you might be wondering, what is mortgage fraud? And once I go over this list, it's gonna become a lot more clear, because I'm sure you've heard or seen some of these things before. The first is transaction fraud. This most commonly occurs when something is not disclosed between buyer or seller, or when the down payment amount is misrepresented on a contract. The second, identity fraud. This is a big one. This is probably one of everybody watching this video, mine included, biggest concerns, identity fraud. When somebody steals an identity and puts that on a mortgage application, that's a form of mortgage fraud through identity fraud. The third, occupancy fraud. Simply put, this is when someone lies on their mortgage application and says that the property they're buying is going to be a primary residence when really they're buying it for investment purposes. And the reason somebody would lie about that is because if it's a primary residence, the bank offers a lower interest rate. So somebody's simply trying to beat the system and say, yeah, this is going to be my primary residence in order to get a lower rate, when actually it's for investment purposes. The fourth is undisclosed real estate debt. That might be when someone lies or fails to disclose that they've had a bankruptcy or that they have a second or third position loan on one of their assets. You have to tell a bank about all the debt that's on a property when someone goes to apply for a mortgage. So hiding it is fraudulent. Number 5 is income fraud, and that's when somebody falsifies the income, usually to be greater than what they're actually making. That's fraudulent. And finally, the 6th one is property information fraud, when somebody puts a mortgage application in and they falsify information about a property to either be better or worse condition than it actually is. So this is super interesting. The highest level of fraud, where it's coming from or where it occurs, is when people are applying for mortgages on investment properties, like multifamily properties with several doors. Think apartment complexes. The lowest amount of fraud that is found is on VA, Veteran Association loans. So that's actually kind of makes me feel a little bit better knowing that our veterans are being taken care of. And it's no surprise that the investment property, multifamily, that there are more people trying to kind of beat the system for investments, that definitely makes sense to me. You might be wondering what areas are more prone to fraud. Well, it is important to know that California is the 5th highest state for mortgage fraud, and the areas in California that experience the most fraud are San Francisco, San Jose, Sacramento, Stockton, and finally, Los Angeles. So does this mean anything for you? If you're looking to buy or sell, is this going to affect you? Not really. This is just information, something that we're watching. And it's important to know too that when you go to fill out an application for financing, these things are important. A lot of people don't know that it might be fraudulent to say, yeah, I'm gonna live in that house, but you're actually buying it as a secondary home or as a rental property. So it's just simply educational at this point. There are so many new, and when I say new, things that are implemented after the last Great Recession that make getting a loan extremely rigorous and difficult. And as you can see, 1 in 90 applications has some signal of fraud. That really isn't that much. Obviously, it'd be great to see 0 out of 90, but at the end of the day, fraud is lower than it was right before the Great Recession, and we don't see anything like that happening. My best advice, always use a local and reputable lender in the area when you're going to get financing. It's as simple as that. If you need a reference for somebody like that, reach out to me. Drop a comment below or shoot me a text, and I'll send you the contact card for a couple of local reputable lenders, and then you can interview them. That's the best way to go about it. Thanks so much for staying tuned on this video. I'll see you on the next one.